And I'm happy to go through some of that stuff with you. So, but let's get started on getting into chapter 3. You made it this far, congratulations. Hanging in there. All right, so in chapter 3, we are going to cover income. What is considered income? What is not considered, well, I should say, what is considered taxable income and what is not considered taxable income. Braden? Hello, come on in. All right, because not all income is taxable. Most income is taxable. The definition, or how the IRS puts it, or how Congress puts it actually, is that all income is taxable unless it's not. So you can assume everything is taxable unless it's somehow specifically excluded from taxation. Okay, and there are lots of different types of income. We've talked about wages so far. That's a type of income. We've got dividend income, which we're going to be talking about in this chapter. We've got interest income, which we're also going to be talking about. We have capital gain income, which we reserve for a future chapter that you all will look forward to. And there are lots of different types of income, but there are some special rules around these different types of income. So that's what this chapter focuses on. And this chapter, it's not exclusive. There are other specific rules for other types of income as well, but these are kind of the main ones. And before we talk about what kind of income is taxable and what kind of income isn't taxable, we need to talk about when exactly it's taxable. Now, up until now, you guys have had financial accounting. So when do you recognize revenue in financial accounting? I'm going to show this video to Will Bond, by the way, so, or Summer, whoever you had in principles.
Is it on the payments made or when you
Does anybody remember? Accrual accounting? Yeah.
When the service or goods are provided to the customer.
Okay, right, exactly. So essentially when it's earned, right? And it might be earned before you actually receive the cash. It might be earned after you receive the cash. But it doesn't, in financial accounting, it doesn't matter when you receive the cash, right? That has really no bearing, except for a cash flow statement, but it has really no bearing on recognition of revenue for financial accounting. Which, when you're first learning accounting, that is a foreign concept, right? It's kind of hard to wrap your mind around that oh, wait, I don't record this until it has nothing to do with the cash. I actually receive it, for all of us, when we receive cash, that's when the party starts, right? That's when you are able to use it, and so that's when mentally you think, well, this is when I have earned this money. But then financial accounting comes along and says, no. Maybe you've received the cash, but you haven't actually earned that money yet, and so we can't record it. Well, we're going to kind of go back to the original way of thinking in tax. In tax, we, for the most part, that's not exclusive, like I said, the answer to most tax questions is it depends, and there are exceptions to every rule. But for the most part, we recognize income for tax purposes when we actually receive the cash. Okay, so seems easy enough that we go back to that. So what I'm saying is, forget about the whole financial accounting when it's earned. Now we're gonna think about it in a different way, when we actually receive the cash. We're gonna talk about different types of income and how tax is applied to them. So we're gonna talk about interest, dividends, tax refunds, which is a type of income. So if you've ever received a tax refund, that is considered taxable income unless it's excluded, which would go on the tax return. And we're going to talk about Social Security benefits. Now, I will give you a little preview here. the hardest thing that the thing you're gonna struggle with in this chapter is taxability of Social Security benefits. Because we got a lovely long calculation to go through to determine that. Now, the good news is that in practice, the software does that for you, right? But we need to understand the components that go into it, and so we are gonna do the calculation of taxable Social Security benefits, because not all Social Security benefits are taxable. In fact, oftentimes, none of them are taxable. But we need to do a calculation to determine that. Then we're gonna talk about certain income items that are specifically excluded from gross income, things that we don't include in our calculation of taxable income. And we've got a couple of specific topics that we're gonna touch upon in the last learning objective. Savings bond interest used for education expenses. We're not really gonna go over the below market interest rate loans all that much, because you run into those so infrequently. Gift loans, original discount debt, we're just gonna touch upon those. So the last learning objective, we really wanna focus on the interest used for education expenses. Usually that's the topic that most students are interested in as well. Any questions so far before we get started? And I already mentioned this, all income is gross income, taxable income, they should say. Sometimes they interchange gross and taxable, by the way, unless the Internal Revenue Code specifically excludes it from taxation. Okay.